Ladies and gentlemen, thank you for standing by and welcome to Halo Labs Q1 2020 earnings call. At this time, all participants are in a listen-only mode. After the speaker presentation, if time permits, there will be a question and answer session over the phone. To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference is being recorded, and if you require any further assistance, please press star 0. I would now like to hand the conference over to Katie Field, President. Thank you. Please go ahead.
Good afternoon. My name is Katie Field. I'm the president of Halo Labs. And on behalf of Halo Labs, I would like to welcome you to our Q1 2020 earnings call. After the speaker's remarks, there'll be a Q&A session. And in addition to myself, your presenters on today's call will be Kieran Sidhu, co-founder and CEO, and Philip Vandenberg, Chief Financial Officer, also co-founder. Philip will present the earnings, and then Kieran and I will participate in Q&A. Before we begin, I would like to remind listeners that certain statements made during this conference call may constitute forward-looking information and forward-looking statements within the meaning of applicable securities laws. These statements involve known and unknown risks, uncertainties, and other factors which may cause actual results, performance, or achievements of Halo Labs and its subsidiary entities or the industry in which it operates to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. When used in this conference call presentation, such statements use words such as may, will, expect, believe, plan, and other similar terminology. These statements reflect management's current expectations regarding future events and operating performance and speak only as of the date hereof. These risk factors are discussed in detail under the heading Risk Factors in Halo's Annual Information Form dated April 16, 2020 and filed on SEDAR. New risk factors may arise from time to time, and it is not possible for management to predict all of those risk factors or the extent to which any factor or combination of factors may cause actual results, performance, or achievements to be materially different from those contained in forward-looking statements. Given these risks and uncertainties, investors should not place undue reliance on forward-looking statements as a prediction of actual results. And although the forward-looking statements contained in the presentation are based upon what management believes to be reasonable assumptions, Halo cannot assure investors that actual results will be consistent with these forward-looking statements. The company undertakes no obligation to update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise, other than as required under securities legislation. In today's presentation, we'll be referring to various non-IFRS financial measures, such as EBITDA and adjusted EBITDA. These measures have no standardized meaning prescribed by IFRS and are therefore unlikely to be comparable to similar measures used by other companies. For a reconciliation of these measures, please refer to non-IFRS measures in the company's management discussion and analysis for the 3 months ended March 31st, 2020. And with that being said, I would like to hand the call over to Philip Vandenberg, our Chief Financial Officer.
Okay, thank you, Katie. Let me start with an overview of the group. In Q1 2020, revenues were 4.5 billion, year-on-year down 49%. Volumes increased 35%, and the company sold 1.5 million grams equivalent. Pricing was minus 60%, and the average price was $3.16. Per pricing is impacted by a 56% of volume generated from flower sales with a price of 107 per gram versus other products selling at 584 per gram. Excluding flower, the price wasn't down 60%, the price for the mix was down 26%. In this respect, Q on Q may provide a better insight, and this is Q1 2020 versus Q4 2019. Q1 versus Q4, volume increased with 64%. The mixed price, because we already did flower sales in Q4, the mixed price increased with 5%, and revenues Q on Q actually increased with 72%. This shows that the drop in the business was most likely in Q4, in spite of the fact that Q1 2020 had virtually no activity at Coastal Harvest in California. The reported gross loss was $172,000, compared with a gross profit of $2.2 million in Q1 2019. To put this in perspective, the cost of goods sold included a $951,000 impairment at MDT, the most recent acquisition, that was included for the first time in Q1 2020. It also included a loss on the value of biological assets of $290,000. So the adjusted gross profit was in fact $1.1 million with a gross margin of 24%. To put this in perspective, if I give you the Q-on-Q comparison for the year 2019, and then to see where we are, and you can draw your own conclusion. The adjusted gross margin in Q1 2019 was 28%, with a gross profit of $2.4 million. The adjusted gross margin in Q2 was 16.2%, with a gross profit of $1.5 million. The adjusted gross margin in Q3 was 14%, with a gross profit of $1 million. And in Q4 2019, the adjusted gross margin was 9.8%, and the gross profit was $267,000. And that compares with a 24% gross margin adjusted in Q1 2020. Turning to operations. First, A&M in Oregon. Q1 revenues at A&M were $4 million, an increase of 38%. Volume sold was 1.4 million grams equivalent, and there was a 179% increase. The price was achieved was $2.76, which was a 51% decline, reflecting the sale of flour at a much lower price than other products, and 56% of the total mix was actually flour sales. The Q-on-Q volume was in fact plus 91%, and the price increase was 8.9%, as we already sold flour in Q4 2019, which is a better indicator of the development of the business at A&M in Oregon. Some detail. Cheddar, we sold 268,000 grams at a price of $5.04, minus 11% volume, price plus 61%. Codfish oil, 72,000 grams, price $11.05, volume minus 33%, price minus 27%. These are all year-on-year numbers. Live resin, 76,000 grams, price $6.96, volume plus 500%, price plus 12%. Flour, 833,000 grams. In Q1 2019, there was only 38,000 grams. The price was $1.07, and in Q1 2019, that price was 33 cents. Edibles, 119,000 grams, price $4.94, volume plus 109%, price minus 18%. Pre-rolls, 70,000 grams equivalent, price 106, and this was the first quarter that we actually did pre-rolls. The gross profit for A&M in Q1 was $944,000, and adjusted for biological assets, it was $1.2 million. The reported gross margin was 23.8%, but adjusted for the biological assets, the gross margin achieved at A&M in Oregon was 31.1%. Turning to HLO Ventures. Q1 revenue, $111,000, minus 78%. Just to remind you that HLO is in runoff, so this is not a surprise. Volume sold was 6,000 grams, minus 66%. This was distillate, live resin, and cheddar. The price achieved was $9.41, minus 67%, as inventory was marked down dramatically, and that's why we could stomach this 67% decline. The gross loss was $57,000. As mentioned, HLO is in runoff. Coastal Harvest. Coastal Harvest had revenues of $104,000, which was minus 98%. Why? was basically no activity. We mothballed Coastal Harvest starting in Q4 2019. The gross loss was $104,000. Coastal Harvest basically has two customers, one of which is Mendo Distribution and Transportation, which was acquired in 2020. Coastal Harvest processes for MDT and makes a margin that MDT actually sells. To give you the perspective of Coastal Harvest, what happened over the past 5 quarters, and also to put it into perspective, in Q1 2019 we had 5.3 million of revenues, a gross profit of 2 million. Q2 5.9 million of revenues, gross profit 1.2 million. Q3 3.4 million, gross profit 200,000. Q4 revenues $600,000, the gross loss $500,000. So therefore, we could see the declining trend in the Coastal Harvest, and it has been prolonged. It has been continued in Q1 2020, as the business was basically mothballed. However, the company has a new methodology. We call it superfiltration, which will be used to produce a distillate from previously written off inventory. And as I mentioned before, MDT had a $950,000 markdown in inventory. That inventory can be used actually to process through Coastal Harvest, which we expect at some point. Then MDT, the first time contribution, revenues were 429,000. The volume sold was 37,000 grams at a price of $10.38. Distillate, of that distillate was 26,000 grams at a price of $9.97. Live resin, 11,000 grams at $11.33. To give you an idea of where Mendo is going, we actually press released the development in California, and we stated there that cartridge sales in California, which is in Mendo, did 298,000 in April, and cartridge sales in May were 217,000, and that compares, those 2 months compare with a first quarter contribution in total of $429,000. So Mendo is on a growth path. The growth loss was 950,000, 57,000, but adjusted for inventory impairment of 951,000. The gross loss was 4.7 thousand. Turning to operating expenditure. Operating expenditure was 7.2 million, a 89% increase. However, non-cash adjustments in operating expenditures were 3.6 million. And adjusted for non-cash items, the operating expenditures were actually 3.6 million. Therefore, adjusted for non-cash items and the first-time contribution of MDT, operating expenditures increased on a like-for-like basis only with 4.7%. A little bit more detail on the OPEX. G&A was 433,000. Salaries were 1.1 million, of which non-cash 229,000. Professional fees were 3.5 million, of which non-cash 2.7 million. Sales and marketing was 749,000. IR, PR was 1.3 million, of which non-cash 489,000. And share issuance costs were 62,000, and share-based compensation was 132,000, which makes up the 7.3 million in total. Turning to the detail in some of the major categories. G&A. The total G&A was 433,000, a 42% decline. There was a 363,000 write-back of suppliers no longer needed to be paid, and that back and adjusting MDT first time, there was actually only a 1% increase in G&A. So I reported a 42% decline. Like for like, there was a 1% increase. Professional. Total professional fees were 3.5 million, a 78% increase, reflecting a lot of M&A activity that was not present in Q1 2019. And adjusted for non-cash items and adjusting for MDT first-time contribution, the increase was 29%. Professional fees are mainly in the corporate sector, 3.4 million, of which 2.7 million was non-cash. Adjusted for non-cash items, professional fees at the corporate center increased with 29% to $615,000. Salaries. Total salaries included in overheads were 1.1 million, a 27% decline. Adjusted for non-cash salaries of 361,000 and NDT's first-time contributions, salaries in fact declined with 21%. Turning to EBITDA. The reported EBITDA was a negative 7.4 million, compared with a negative 553,000 in Q1 2019, but also compared with a minus 13.9 million in Q4 2019. So an improvement from Q4, but still down on Q1 2019. The gross profit adjustment was 1.2 million. Non-cash adjustments are 3.9 million. So adjusted negative EBITDA was 2.3 million, compared with a negative EBITDA of 553,000 in Q1 2019 and a adjusted negative EBITDA of 4.9 million in Q4 2019. Adjusted for NDT's first-time contribution, the negative EBITDA was 2 million, compared with 4.9 million in the fourth quarter of 2019, and as said before, 553,000 in Q1 2019. Turning to cash flow. Cash used in operations was 2.4 million. This comprised of a loss of 8.6 million net loss. Non-cash items added back 4.9 million. A release of working capital of 1.25 million. CapEx was 0, and cash flow from finance was 188,000. The total cash outflow in the quarter was 2.25 million. The total available cash as of March 31 was 2.3 million, which excludes 1.5 million of restricted cash for interest payments on the 2019 convertible. The company has a credit facility which has been converted into a convertible. So total cash available for funding is in fact 10.2 million, with a cash burn of 813,000 in Q1 per month. In the first quarter of 2020, the company has 13 months of funding available. Turning to acquisitions. In Q1, the company acquired Mendo and Canalift at a fair market value of 7.3 million, all paid in shares, and assets added were 5.3 million to total assets of the company. In relation to these acquisitions, 65.4 million shares were issued. The fair market value paid for MDT was 29 Canadian cents. The fair market value for Canalift was 11 cents Canadian. And the fair market value of the aggregate of those two was 18 cents Canadian. Of those two acquisitions, MDT is a revenue generating company. That's a business in place. Canalift is under development, which is a delivery mechanism, which we expect at some point to start contributing, but it has not contributed anything yet. Turning to the balance sheet. Net debt was 6.1 million. Net assets were 33.2 million. The net debt to equity was 18.4%. So we have a healthy balance sheet. Current assets, 18.9 million. Current liabilities, 10.1 million. Working capital, 8.8, of which at the end of Q1 2020, and 1.25 million was released during the 3-month period, which helped to restrain the cash burn. The capital structure. At the end of March 2020, shares increased with 105.6 million. Share capital increased with $13 million, and the net asset value per share stands right now at 9 cents. Share issuance in private placements were 6.4 million shares. Share issuance for acquisitions, as mentioned, NDT and Canalift, was 65.4 million shares. Shares issued to finders, 4.8 million. Shares issued for services, and this was a big non-cash part of what I discussed before, was 26.6 million, and share-based compensation was 2.5 million shares. The share count as at the end of March 31, 2020 was 385.9 million, and as of June 19, 2020, the share count is 447.1 million, an increase of 61.2 million. Warrants as of March 2020 was 151.2 million, and as of June, the warrant count is 117.2 million. 5 million warrants were cancelled, 28.9 million expired. Options as of March 2020 were 9.2, and as of June 19, 2020, there were 8.8 million options outstanding. 365 were forfeited as staff left. The convertible dilution as of March 31, 2020 was 12.7 million, and after March 31, 15,000 convertibles were actually converted. This concludes my presentation of the financials for Q1 2020.
Thank you, Philip. So as I stated before, we'll be going through a question and answer session. So we have some questions that have already been submitted, but we'll also take your questions, so feel free to start logging into that part of the portal. So this first one is for Kieran. So Kieran, everyone would like to know, what is the status of the buffalo takeover, and just a general update on the situation in Lesotho.
So in terms of the takeover, a few shareholders on Twitter were actually asking me about why it's taken so long. And the Central Bank of Lesotho got back to us and basically said we needed to produce new shareholder lists, because the shareholder lists we produced prior to the lockdown were no longer valid. They had gone stale. So we actually have a record date of Wednesday, which is today, I think June 24th or June 25th. Philip can correct me if I'm wrong. We're having Broadgate generate the shareholder lists. Philip's going to put them in format, send them down to Lesotho, and that was what the central bank said they needed, was updated lists in order to give us the final stamp of approval. The second part of it is what is the situation down there? There's still, the last I checked with Louisa a week or two ago, not a week ago, maybe 4 or 5 days ago, over the weekend, the airspace is still closed, so there weren't flights coming in and out. Ironically, she's been separated from her husband for 3 months. But freight has been moving, which wasn't moving before. And so lights and other supplies are getting in. Some of the labor restrictions have loosened. So we're actually pulling down the winter crop. Again, a few shareholders asked me for recent pictures, and I thought of flying a drone over there, but for technical reasons, they don't have access to a drone. So I'll be posting some pictures for people to see the current state of play down there over the next day or two. Katie, next question.
Okay, great. The next question is regarding CanMart and just in essence what the status is of that. I'm happy to answer it. I mean, in essence, COVID-19 has just created delays in general, and it definitely sort of lengthened the discussions that we've been having with the executive team there. So we recently signed an extension that gives us some more time. We've been making progress. We've seen some momentum here the past couple of weeks, so we actually plan within the month before the next extension expires to have a definitive purchase agreement signed. And in the meanwhile, it's been great in terms of timing because the UK market is really starting to heat up. So while CanMart at present is licensed to store and distribute medical cannabis in the United Kingdom, and they have products stored in the government MHRA certified warehouse, between 2019, when we initially started looking at this, and now, prescriptions have almost doubled. So they're now, they were at 6,883, I believe, and now there are 12,000 prescriptions, and with the next tranche of prescriptions coming online in the fall, the industry projections are actually expected to grow an additional 30,000 prescriptions. So it's really, there's going to be a lot of growth, so we think that this timing is good. Moreover, clinic chains are expanding, so patients have more access to physicians who can write the prescriptions. And of course, I think we're all probably familiar with the fact that the projection that by 2024, the UK medical cannabis market industry analysts have predicted it to be worth almost £1 billion. So we really think that this is ideal timing, even though it's taken a little longer than we all would have liked. We're actually, we're pleased with how all of this is dovetailing together. So this next question, Philip, I think it would be great if you could chime in on this. But investors are wondering whether, is the worst behind us at this point, and will the rest of 2020 improve? What are your thoughts?
Yeah. Well, just go by the observation of what we've seen in Q1 versus Q4 2019. It appears that the low in our forecast in Q4 2019, and although one swallow doesn't, but it looks like that Q1 was better than Q4 and kind of on the right to resume growth. Now, if I just repeat kind of two numbers here, and that is Q-on-Q performance, Q4 over Q1, when there was a 64% increase in volume, basically of grams sold. Prices increased with 5%. And revenues Q-on-Q increased with 72%. So that suggests that the trough was passed, and Q1, so it's where we want it to be, but it's basically we're starting to go again. I think to say is that Mendo generated revenues in Q1 of 429,000. If we look at what it did in April and in May, 298,000 in April and 417,000 in May. That looks like that in Q2 there could be double what it was in Q1. So that's Mendo. And then to explain a little bit about the situation between Coastal Harvest and Mendo. Like Coastal Harvest used to process and Mendo used to sell as a. Mendo was a client of Coastal Harvest. That's all we took over. Now Mendo has its own business. It buys in the market. It can sell its own product, which it has done as the 429,000 shows. And it will still bring a product to Coastal Harvest, and that will then help Coastal Harvest actually open the business too. At some point, Coastal Harvest will reopen with its super filtration, and that will start to have growth in Coastal Harvest too. So just and I was doing pretty well too. So the operations are kind of starting to grow again from a low level in Q4 2019, accelerating in Q1 2020, and they're accelerating further in Q2, which we reported in our overview of California, which we press released. So yeah, I think it looks like the trough has been passed, and we're doing good. We're doing better.
Thank you. Kieran, what are your thoughts on refocusing the U.S. operations or continuing to refocus the U.S. operations, expanding on our core concentrate business, but really expanding to a wider range of products?
Yeah, so we're doing that. I mean, what we're doing is we're building a nice flower business, a nice pre-roll and infused pre-roll business in Oregon. We're launching, more edible SKUs in Oregon. In California, we're launching edibles. We are, again, trying to build on a flower business and an infused pre-roll business. In California, we're seeking out cultivation assets, more indoor and high-end, to build a cultivation business. But there we would do it in partnership with established brands, in collaboration formats. So it would be, for instance, our brand collaborated with theirs on the shelf of dispensaries. As we've indicated in some of the press releases, our numbers are, Philip said, all headed in the right direction. Regarding Nevada has sort of been, it's been really hit hard by COVID, obviously, and they're starting to experience a second wave there. That being said, Nevada is something we're looking to revisit ourselves in terms of just seeing that, again, if we can follow that paradigm of getting some great California flower brands into Nevada on a collaboration basis that are already known to the Nevada population, it could be quite helpful. Now, the trick for us as a company is not to do too much too fast and break. So with that being said, I think that if we launch, all the SKUs of edibles we're planning to launch, we launch infused pre-rolls, we launch pre-rolls, I think that's a lot of revenue and potential profit contribution. Another key aspect of Oregon in particular is to put more revenues on our rails. And so a lot of people are not focused on Oregon, but Oregon, ironically, is a third of the size of California and growing faster. And when we're out there in Oregon looking at assets, we're starting to see what I would say attractive deals on assets. And I think Oregon for us is sort of while a lot of people are pushing into California, we're not seeing as much pushing into Oregon. So we think we have room to grow in Oregon that could be even surprising to us. And that's the answer, Katie.
Thank you. Okay, we got a question about GEZ and the collaboration with Feel Better, and just a general sense of the products that we're expecting from that partnership.
Katie, you want to handle that one?
Sure. So, when we announced that partnership originally, GEZ actually mentioned us on social media, but it's the beginning of now. We are basically the laboratory, our manufacturing facility is where our partners are starting to build out the Feel Better cannabis products, the concentrates in particular. So there is a process of, just commercializing them that we're in the middle of. And I believe that the plan is that as GEZ continues to promote his new album later this year, that will dovetail along with some of the Feel Better products. And that's really when we expect to see the fruits of this partnership, although we've already started to collaborate with the bullVestor founders, and they've really been wonderful, and they've actually helped us with some new designs for Hush packaging as well, which we'll be excited to launch in California this fall. So it's TBD, not going to pin down a specific time frame, but we think later this year, potentially in Q4, in line with the tour schedule, that we'll be seeing some of these bullVestor products come to market. Okay, we got a question here regarding LA, and everyone's aware that that's where the North Hollywood dispensary is going to go into place, and with the unrest, with some of the rioting and looting, is that affecting us at all, and what about the opening of that dispensary? So in our eyes, I can answer that. I mean, in our eyes, this did not impact the North Hollywood dispensary strategy. On behalf of the company, we're, supportive of the community voicing the injustice, and it's part of this process as a country that we're going through. But we believe in Los Angeles. We think it's a tremendous dispensary market, and the DCR, which is our regulating agency for this license, did not shut down. So from that perspective, the rioting did not have any effect on their speed. So, we've been in contact with them, and the transaction has also been in the process of closing, which should really happen, within the next week. At that point, we can really turn to the build out and in a parallel path, pursuing final licensing, both at the state and final local inspection. So all in all, just assuming we have those regulatory approvals in place, we expect the dispensary to be open by the end of the year, if not sooner. Great. And then this question here, Kieran, I think you might want to answer it, but it's regarding the super filter, and there's a question surrounding patenting it or trademarking it, and to protect the innovation and potential revenue size on the technology here.
Right now in California, we're just having trouble keeping up with our existing demand. We recently we had 2 salespeople in Q1, and Q2 we've expanded that, which we stated in our California update, to 6 salespeople, and we're just having, have our hands full just, remediating the oil we have on hand to supply dispensary partners in California. Sometime in the future maybe we could toll. But right now we don't have the scale to toll for anyone else, given the demand we're seeing in California. Regarding patents, this is something our founding scientists, Dr. Prakash Gill and Dr. Valery Karasaprov, always said that if you have trade secrets, the last thing you want to do is patent them. Because then or apply for patents, because people will have workarounds from that. So superfiltration and the mediums we use vary depending on the pesticide or the metal we're trying to remediate. And so it's sort of like a cookbook of formulation rather than some sort of, spinning top that you can patent mechanically.
Okay, great.
And that's my answer. Yep.
All right. Well, those were all the questions that we had submitted in advance. So with that, I wonder if, Chris, you could let us know if there are any audience members in the queue right now to ask us some live questions here.
Certainly, and as a reminder, it is *1 to queue for a question over the phone. We do have a question from a caller from Joe Coco, private investor. Joe, your line is open.
Yeah, I was just quickly wondering if you could go over some of the issues that are happening in Lesotho. like the new government, possible drought, things of that nature that could affect the operation moving forward, and as well as maybe just quickly talk about how some of the MJ companies have left the space, like Canopy. Thank you.
I can answer that. So the change in government has had no effect on us whatsoever. In terms of the drought or a potential drought, we have, if you look at the satellite photo, we have a water reservoir or a water stream that comes down the, if I'm just looking at my map, it's down the western side of the property. And so what we do is we take that water and we put it into treatment ponds where we actually use fish and other mechanisms to get the alkaline levels up. Regarding other companies' strategies in Lesotho, I think I can't speak for Canopy, but I know that the people who sold the asset to Canopy and bought it back were more than happy to buy it back, and they've actually approached us to do some cooperative stuff, which we're not ready to do right now. The bigger issue in Lesotho right now doesn't really have to do with the government or with Canopy leaving, but the bigger issue right there now is when are planes going to start flying, and when is business going to open up? It's this sort of COVID uncertainty that has been the biggest issue that sort of keeps me thinking at night. Because we're now, we're now March and we're into June, and things still haven't opened up fully. And so it's a question, I think, with a lot of industries of, when will that open up? What we're seeing in let's call it with our U.S. assets, with the exception of Nevada, sort of a COVID pop. We're not seeing a COVID pop in Lesotho at this point.
Okay. I had another question, if you don't mind answering it.
Sure.
Yeah. In regards to the CanMart scenario, I read a little bit about the possibility of the WHO and the UN voting in December on reclassification. Do you have any ideas about what's going on with that and how it would affect the UK and how it possibly could affect CanMart?
I haven't looked at what who is doing. Is it a positive situation like the INCB?
I'm not 100% sure, but I did see a few articles talking about the possible vote that has been extended from March, and that vote should take place in December of 2020. I think that the WHO is trying to push it in the positive direction, but I was just wondering if you had any thoughts about that. And if you were unaware of it, that's okay. Maybe you can get back to us on that.
No, I think I've heard about it. I mean, our focus has been on this INCB Phase 2 certification of Lesotho, more so. But that's something I'm sure this we'll take note of and we'll comment on. I think I remembered seeing something that was favorable where there was a declassification or something. But yeah, we'll do that.
I can't see them changing it now. Thank you.
No, I can't either.
Okay.
Yep. But thanks.
Thank you.
We do have another question from John Smith, private investor. John, your line is open.
Hi, yes. I maybe missed this, but did you guys speak to the build-out of the Alberta dispensaries at all and what the status is on those?
Katie, you want to answer that or you want me to answer that?
Maybe you can start off and then I can add any other details.
Cool. Okay, so there are 3 that are open right now. They're doing well. They're doing actually quite well. And then the deal contemplates another series of construction starts as well. We have put the application into the AGLC to get the licenses transferred. And the strategy there is really what I call a front-to-back strategy as opposed to a back-to-front strategy, because from our analysis and what we're seeing is, especially with these three sort of these three dispensaries plus the starts we're looking at, it's a nice business, but what it does is it gives us a foothold to get our products listed, and then also gives us a close relationship with High Tide, which is growing at a fast pace, to get our products, hopefully, with no commitments, obviously, on their shelves over time. But yes, we're still looking at that, and we're still keen to do something there. And it seems that that sort of like what we've seen in Oregon and California, the pandemic hasn't had a material adverse effect on those particular sites.
Okay, thank you. And I just had one I'm sorry, Katie, go ahead.
No, the only other thing I was going to add is just that, typically with these transactions that require regulatory approval, a lot of times they really can't fully consummate and close until you get that final green light. So to us, getting our applications into the AGLC was a great step, and everything is pointing in the right direction. So we're looking forward, to rolling out
Perfect.
fully there.
Thank you. And then just one real quick follow-up. You mentioned looking at possibly acquiring some cultivation facilities, whether that be in California and or possibly a farming situation in Oregon. I know that would probably be done via shares to help with cash flow. Outside of those two situations, would we be looking to mitigate more dilution in the near term until things kind of stabilize more, or kind of what's the thought there?
It's sort of this prisoner's dilemma or catch-22, right? So if we have an asset that's going to be accretive, we're going to have to look at it using some equity and some debt. And what we're trying to do now, conceptually, is structure more debt sort of in an LBO or PE format, where if we buy an asset, the debt is tied to that asset. So if that asset has an issue, that the debt will, the workout will remain at that level as opposed to at the corporate level. We're very leery about debt at the corporate, or invoking any more debt at the corporate level at this point. And so that's one tactic we would look to use. But net, being large shareholders ourselves, I think that what you saw through Q4 and Q1, you're not going to see the same level of what I call share activity that we had in the past. Also, in addition to what I just said, another critical point, which is a good point, is that we weren't retraded on the NoHo deal, and we weren't retraded on the buffalo deal. So we managed to keep those in place, even though the stock dropped precipitously, and so that's critical. So I think the biggest emphasis for us is closing what we have on our plate right now, and then as we look at assets, trying to somehow use debt or use sale leaseback or other techniques tied to that asset to mitigate equity issuances.
Okay, thank you, Kieran. I think, as shareholders ourselves, myself as well, that it's very easy to get more behind a cultivation or farming facility that you guys are looking into. I think the one-off products, while they could be accretive in the future, are a little bit harder pill to swallow given the cash flow and the revenue issues currently. So I appreciate you taking the time to discuss that and explain it.
No, and I couldn't agree with you more, is that, we have enough products, we have enough assortment, and operationally we have to execute on the products and the assortments we have. And what we have to do is get behind assets that put more revenue on our rails and capture more gross margin in order to mitigate public company costs.
And again, it is *1 for a question. At this time, there are no more questions over the phone. I will now turn the call back over to the presenters.
Great. Well, I think that from Halo Labs, that's all that we have. Thank you for joining us this afternoon, and we appreciate your time and your support. So Kieran and Philip, do you have anything else to add?
No.
No,
Kieran?
I don't.
Okay.
No, I don't.
All right. Well,
thank
you,
everybody.
everyone. Take
Bye-bye.
care. Bye.
Ladies and gentlemen, this concludes today's conference call. Thank you for your participation.